It makes sense to me, though, that cutting people open with scalpels and putting a hand inside a patient and rooting around and trying to sort the issue out, like that is not the future of medicine.
There's a whole difference between that and legitimately pitching something yourself to an audience. And whether it truly does not matter, I don't think, whether the pitch ends up being a successful investment or not.
As an international investor, I absolutely prefer to have like exposure to developing markets as well as mature markets.
That basically means that Relay's molecule is the only game in town if it's going to work. And when is the readout? Tomorrow, May 19th. So I'm actually going to go on Patreon after we record and say, hey, heads up, anybody that wants to get in Relay ahead of the readout, you have 1 day, basically.
For an advertising-free version of this show, check out wallstreetwildlife.com.
Welcome to the Deep Investing Jungle. Your hosts, Luke the Badger Hallard and Krzysztof the Monkey Piekarski. This week on the show, we're continuing the King of the Jungle portfolio review, and we've got another batch of stocks for a full bull and bear debate for you. Plus, Krzysztof has a surprise announcement. I'm not in on the secret. He's got a big reveal for us at the back end of today's episode. And we've got excellent news about our community portfolio and an incredible 11 fantastic recommendations that are up for voting in May.
Boy, do we have a full docket badge. Let's start off with the most important thing, and that's how you broke my heart. It's always been me the same. Like, you know how many times you break my heart during the week? This time, I open myself up in all vulnerability, and I say, "Hey, come down. The Mrs. Monkey is out of town. Come down to Sicily. I have a brand new donkey cantina for you," and you flat out deny me the pleasure.
Well, look, Mrs. Badger is cycling in Mallorca with her cycling buddies. So I'm here nursemaiding Sushi the cat, who's a bit under the weather. He's wearing one of those cone things at the moment, so it's not great. And I've just been ill. I'm still ill from my Scotland weekend last weekend. So basically, like yesterday was Sushi and I on the sofa watching like back-to-back movies all day.
Oh, well, fantastic. Well, you know, the invite was genuine because now the properties are fully functional. There is the donkey cantina, but we also have a bed. You look at me like I'm joking. I am not joking. But outside of the cantina, there is a bed and there is electricity and there is a place to rest your head. So there's that. But also, interestingly, we got in touch with a very expert level, high-class architect who works on world-class projects, because these properties have a real amazing potential if only we could connect them properly. And so it's a complicated task. It's going to take years of doing, but because we're looking to legitimately drill walls and knock down structures and rebuild roofs, which are over hundreds of years old. And so it's quite the project, but I would love it if you came down and saw one of these days.
Yeah, I'd love to. Yeah, like I'm going to be down in Portugal and Spain on the motorbike next month, but probably not close to Sicily, but I'll definitely come check it out. Definitely for next year at least, if not this year, because we're going to have the live Patreon meetup part 2, which was in Las Vegas 2 months ago, and next year is going to be in Warsaw.
Yeah, you know, hey, speaking of, rumor has it that Warsaw is the new Berlin. I'm hearing this not just from a couple of people, but there was something that happened in Berlin, kind of not right after the wall fell, obviously, but there was this period where all the artists lived and it was still really cheap, and all that energy that gets released after a bad thing and that was Berlin for a good while. Really one of my favorite cities in the whole world. Ran the marathon there. It was just one of the most delightful days of my life. And Warsaw seems to be going through a similar kind of phase now where the post-capitalistic kind of over-glamming everything has subsided, and the culture and the art and the kind of like that free zone is happening. And so I couldn't be more excited to see what it looks like next year.
Yeah, me too. Great stuff. It'd be nice to see it, but it's not like 20 degrees sub-zero Celsius. So when you're a nice, like, temperate Warsaw summer, that'd be great.
Yeah, right on.
All right. Shall I tell you what's been happening in the community portfolio over at wallstreetwildlife.com?
Yeah, Badge. We set up our third investable or real money portfolio to see what our resident beasties come up with. What's the latest?
Well, we've got so every month we run a process from the first of the month for the first couple of weeks. Our Patreons are open to nominating their investment idea. And then around mid-month, so actually just now, we then pivot we close the submission period and we get into voting. We get a ton of votes, and the stock or stocks that get the highest number of votes, you buy in the real money community portfolio Robinhood account. And I think we've got 9 or 10 stock holdings now. We started it with 5 in the first month. We're now about 6 months in. And so here we are in May, and we've got an incredible 11 really good quality nominations. So I just want to give you a bit of a feel of those. And if you want to check them out, swing by wallstreetwildlife.com and you'll see them in the community chat. Got a real mix of...
Before you go on, if I may, Monkey gave, I don't know, this is what that felt like from my side. Monkey went on the Patreons and gave our resident beasties a little talking to, because I hope it didn't sound harsh, but it was the difference between, it was really reminding folks that being a passive player in investing, meaning you tend to default to following what others research and do, and you buy what others buy. There's a whole difference between that and legitimately pitching something yourself to an audience. And whether it truly does not matter, I don't think, whether the pitch ends up being a successful investment or not, but it's the process of having done that all of a sudden flips some kind of switch in people, and they begin to realize like what it means to get serious about this. And that way lies all kinds of positive benefits. So I think that's why I was so adamant about saying, don't just watch this, get in there, get your paws dirty. And I'm so glad to see that. Yeah,
totally. It's coming to life, and it's giving, you and I a rich, like, vein of ideas to explore that, some of which we've never really looked at properly. ASTS, came from the Patreon community, and it's now like your biggest holding, I think, or, not the second biggest holding. We both considered, you bought Lemonade and I gave it strong consideration a couple of weeks ago, and that was a community portfolio holding. And there's a bunch of ideas in this month's nominations that actually quite excite me, many of which actually I've not heard of. So I'm going to go deeper than just reading like the headline summary, the one slide summary our Patreons have put together, because there's picks around AI infrastructure, robotics, public safety, nuclear, space, digital health, fintech. Like, these are all themes that I'm really aligned to, and I feel are going to drive future growth. So fantastic.
Right. And in the world of too much, an activity like this really says, okay, well, somebody in the community thinks this is the best idea they have. Let me look there. And it really helps filter where your focus should be. So we're fans of this in all the ways. I just want to reemphasize that the real prize of this, I hate to sound like a professor, but it's in what you yourself learn from having done it. And the benefit to the community is, of course, if your pitch is good and you're looking in the right place, we all make money from it. But but we got to get more self-motivated, basically. And this is a fantastic way of doing it. So I'm so happy to see these rising numbers.
Yeah, it's great stuff. Good. And I will actually, I know this chap, but I am going to give him a bit of a shout out because one of our newer Patreons, he's actually been lurking for a while, and he and I had lunch a couple of weeks ago. TC7. So 4 of the nominations in this month's 11 are from TC7. And they include some really exciting ideas, companies I'd never heard of, totally off the radar. And I spend all my days on X looking at stocks. These are names I've never crossed my radar. So check out all of the picks, guys, because they're all really interesting. I'm not going to drop the tickers here because you've got to come to wallstreetwildlife.com if you want to see what stocks we're talking about. And if you do, and if you join up, then you can have a vote too. That's right.
You got to pay the big bucks to see the big winners. Ain't no free banana around these parts.
You got it. Well, let's give some free bananas though, because we're going to carry on our King of the Jungle portfolio review. And so, across the Badger portfolio, the Monkey portfolio, the community portfolio, we've got probably 30 or 40 different stocks now. It's pretty broad coverage. And over the next, however long it takes, 10 episodes, we're going to just pick these off. We did 4 last week. I did 1 the week before that. Today we're going to get through 3 more. And we're going to give you a feel of what these companies are, what they do, but we're going to try and have a live, rich, bull and bear debate about these companies and, potentially attack each other's ideas and explore the bear case for all of them. So, this is an exercise that makes us better investors.
All right, Badge. So you want to start us off with your sugar daddy?
Yeah, my sugar daddy. Yeah, here's my first free banana. Intuitive Surgical. You'll have heard of this stock if you've been following me on X, because this is the company I bought 2006, the first growth stock I ever bought, and I have not sold a share since then. And it drove my portfolio returns for a long time. Intuitive Surgical. If you need surgery to remove your appendix or repair a hernia, traditionally a surgeon would cut you open with a big incision, stick their hand inside you and stitch you back up afterwards. They had a big scar, a lot of pain, and weeks of recovery. I've got a big appendectomy scar, and I'd rather not have that, but there we go. Well, Intuitive Surgical built a suite of robots, but their main one is called Da Vinci, and it changes that completely. So the surgeon doesn't stand over you with a scalpel. Instead, they sit down at what looks like a video games console a few feet away from the operating table. They put their hands into special controls and they look into a screen that gives them a magnified 3D view inside the body. Meanwhile, a big 4-armed robot is standing over you, the patient. It's got tiny instruments about the width of a pencil, and they go in through small keyhole cuts in your skin. And while the surgeon moves their hands around at the console, the robot's arms copy their movements exactly. They move the wrist, the robot wrist moves, and pinch the fingers, the tiny scissors snip. So the advantages of this technique are huge. Tiny cuts instead of big ones, so less pain, faster recovery. No hand tremor, where the robot can filter out shaky human movements. The surgeon can see better with this magnified 3D vision, better than peering through a little keyhole. And the surgeon doesn't get tired standing for hours. They sit comfortably. Hospitals love it. Patients love it. Surgeons love it. And once a hospital buys one, and trust me, a ton have, they're locked in for life.
That's a fancy chart there. Badge, I think one of the things that's maybe hard to understand from somebody on the outside is, can these machines be sold ad infinitum? In other words, this is maybe a market size question, but it feels like you've been invested in this for over 20 years. A false assumption might be, well, surely most of the hospitals that wanted these already have them, and they're really expensive. And, so at some point, the market probably already figured this out. So where's the alpha in, say, owning it today?
Yeah, good question. Like this, so actually, let's think about their growth numbers. So today they've got a total installed base of nearly 11,400 devices in hospitals in many, many parts of the world, mostly North America, but they're all over the world too. And in the most recent quarter, which they reported about a month ago, towards the end of April, the install base was up 12% year over year. So these guys are dominant, over 10,000 systems, and they're still growing, like the number of deployed systems at 12% year over year. So growth is really healthy. But it's not just about having the systems deployed in hospitals and the doctors trained. It's really about what procedures can you do with a Da Vinci from Intuitive Surgical. And right at the start, it was about like a very specific procedures like prostatectomy and like things in the abdomen and like very specific types of surgery that this technique was targeted to. But they broadened into what's called general surgery quite a few years ago as their robots became more capable and as they got like a wider range of approvals from bodies like the FDA and their international equivalents. So now they're like the standard of care for a whole ton of different surgeries. And there's a really interesting statistic I ran into when I was listening to the most recent earnings call. The new CEO is a guy called Dave Rosa. And on the most recent call, he said, I'm going to quote from the earnings call here. In the US, Da Vinci procedures grew 14% year over year, led by strength in general surgery. Growth was supported by a 31% increase in after-hours procedures and higher overall utilization. So 31% increase in after-hours procedures. That says one thing to me. It's like the hospitals have basically got their surgeons and their teams working like around the clock, almost overtime, because there is so much demand for the types of surgeries that can be done with these Da Vinci robots that they just want to, like get as many patients through that pipeline and maximize the value of their investment, because these are not cheap machines. And so there's huge demand, growing demand for hospitals to like use these and want more. And the beauty of Intuitive's business model, like the real magic, is it is the razor and blades. And I characterize this as robots and blades a couple of years ago when I wrote about this the first time. It's the recurring revenue, because the hospital buys or leases the machine or multiple machines in a bigger institution, but they have to replace the actual, like the things that go inside the body, the knives and the cutting tools and the pincers and the clamps. And they replace those every, like 10 or 20 surgeries these days. That increased. And so those consumables, they're not cheap either. And that's like a perpetual revenue stream for the company, where the hospitals buy the machine, they've got incredible demand, so they're working basically overtime, they're doing more surgeries, more procedures, and they're buying more and more consumables, and that's more money in the pocket of shareholders.
Hey, Badge, why are the margin numbers relatively flat? I thought with something like the recurring revenue model, like you're talking about, that over time margins would go up, drift upwards.
It's a good question, and that actually takes us into a good part of the bear case, because this is a mature company, right? So they've been operating since the 90s. They're on like their fifth major generation of hardware. So they're incredibly well established. And there's that tens of thousands of surgeons, more than that, trained to use these Da Vinci robots. They've been the only game in town, really, for most of their lifetime. And they've been so far ahead of competition. I think a couple of years ago I said, maybe I'll walk some of this back, but a couple of years ago I said, I generally, my investment time horizon is like 10 years. here is one of the few companies in my portfolio where I would not be surprised if these guys are still the market leader in 20 years' time. Well, and 20 years is like more than a lifetime of an investor. Competition is coming. And so they've been the only game in town. They've had incredibly high and very stable margins, but competition is coming mostly from Medtronic Hugo, and they got quite a significant FDA clearance in December 2025. And so, as competition comes in, that does erode margins because some hospitals are going to start using the competing machines. And there are a bunch of smaller players as well. It's not just like Medtronic versus Intuitive. As hospitals have more options, that is just going to drive down cost, I guess, what hospitals are willing to pay. And so, that's just kind of a natural effect of the competition eating into them.
There's also a fancy type of surgery called bariatric surgery, which rumor has it the good old GLP-1s are starting to, I guess, require the GLP-1s because they're effective are cannibalizing, in a sense, the need for this kind of surgery. Can you explain to us what that kind of surgery is and how worried are you about the cannibalization?
Yeah. So bariatric surgery it's like a bunch of things, but mostly it's like surgery. Yeah, this is actually, it's been a concern for a couple of years since GLP-1s came on the scene. Just explain what it's about. Like bariatric surgery is stuff like, it's like weight loss surgery. So things like a gastric bypass. So this is actually a pretty small segment for Intuitive. I think it might be like 10% of 8 to 10% of the procedures done with Da Vinci robots were bariatric procedures. Well, that is now trending down because if you're morbidly obese or, severely overweight and you're in the category of person that would be considering surgery because you can't, you're not able to get on top of your weight issues with dieting and things like that and lifestyle changes. Well, now you have this new tool in your arsenal, which is GLP-1s are, they're kind of a wonder drug. And if you can take those, if you take a pill every day or get an injection every quarter, rather than having what is essentially fairly major surgery, then that's clearly like a better option for you as the patient, less invasive. So more patients are turning to that. That's a good thing for society. Sure, it hits Intuitive in terms of that one particular category of procedures, but there's still, it's a small segment. So yeah, that is nipping at their growth a little bit. It'll be a headwind for a while, but at some point it will stabilize because there'll still be a percentage of patients it will still be superior outcome for them for some reason to have bariatric surgery overtaking GLP-1s. So, the segment's not going to vanish, but it is going to shrink.
So I think one of the concerns I always have is when you watch, a lifetime stock like this do so well for 20 years, you think, well, obviously I missed the boat. Why invest now? And to that effect, you, I think, deliberately added this to the King of the Jungle portfolio because that was the main thing missing. And you did that relatively recent, within the last year, if I remember correctly. But how enthusiastic really are you about the future rather than the past of this company?
Yeah, it's a great question. Like if I'm really put everything aside and I'm super transparent about this is an outsized position in my retirement portfolio, like my main portfolio that funds my lifestyle. And it's because, it's a dumb reason, right? It's the first thing I ever bought. I kind of want this to be like the one stock I never trimmed, never sold. And I've still got like other rules that will kick in if this gets to north of 15% allocation. So it's emotional reasons rather than like hard investing reasons why this is a big allocation in my portfolio today. And I added it to the King of the Jungle, just frankly, because it was missing and it should have been there, because King of the Jungle is supposed to reflect my retirement portfolio and my real life conviction. I would say, if I didn't own this today, I would certainly buy a piece, but there should not be, it's an expensive company, and there should not be like an outside allocation in an investor's portfolio. I've got it at a 3.5% allocation in my King of the Jungle portfolio, and I think that's probably closer than the 8 or 9% allocation that I've got in my retirement portfolio. Again, that's for kind of random reasons.
Interesting. As you were talking, Badge, I was looking at the charts, and it seems like, obviously the trajectory over the lifespan of this company is phenomenal, but the last 2 years, we're basically back where we were about 2 years ago, right?
Yeah,
So
exactly. The stocks traded like flat down over the last couple of years. Yeah,
but it's still expensive, right? Like,
it is. Yeah. I think it's not expensive if you continue to believe that they're the only game in town, but that's no longer true. I think if you give like good credibility to companies like Medtronic and others coming in, then it is expensive. But then I think it will probably always be the leader because it's so far ahead and it invests so much money in R&D. Like it invests so much in itself, it has a lot of spare capital. So in the most recent earnings call, they also announced a $1.1 billion stock buyback. And they've had a buyback program for several years. That's actually quite a meaningful step up in the buyback. So they do have like cash sloshing around now that kind of they don't know what to do with. I mean, that's, when you're coming out of like growth mode, you're a mature company, when you start really like throwing off that kind of capital back to shareholders through either buybacks or dividends.
yeah, I mean, it's the question of how is the best behind it, or why invest now? Would you invest now if this wasn't your memory stock?
So, like, to your question of really, this is you've said, Luke, this is an expensive company. Should you buy it now? Like, even with competition, I find it hard to believe that this company will still not be a leader, if not the leader, in robotic surgery in 10 years' time, maybe 20 years' time. And, it's been a winning strategy for me as an investor for over 20 years to try and find the winners, or just, buy the acknowledged winner in segment that the world needs more of in the future. And I know I'm a sci-fi, kind of, techno-fantasist sometimes, but it makes sense to me that the future of medicine, ultimately it's like some, Star Trek style thing. You lie on some med bed and then some scanner moves up and down your body and maybe some like nanobots go inside you and then you get fixed. Right. But that's a long way out. That's like 100 years out. It makes sense to me though that cutting people open with scalpels and putting a hand inside a patient and rooting around and trying to sort the issue out, like that is not the future of medicine. That is the past of medicine. And so here we have robotic surgery, currently like human guided robotic surgery, but AI is increasingly playing a role in advising, guiding, recommending things to the surgeon. It strikes me that, this is the future of general surgery in most things, other than the most ultra specialized, neurosurgery or something. This is going to be the future of medicine for most like surgical interventions over the next 50 to 100 years. So what's going to go wrong owning the winner in a segment like that, right?
Yeah, and that goes back to the original question I had. I think we get too localized with our own experience, but there's a lot of people on this planet. There's a lot of hospitals. Some hospitals are barely, into the modern world, let alone have anything approximating one of these sophisticated systems. So, I mean, I'm speaking as a layperson, but it seems like the big picture is there's a quasi-infinite runway, and it's just a matter of time, or it's their story to mess up, right? If they have the lead, they have the name, they have the capital, they have all of it, right? And so as long as there's good stewards running the company, which obviously there are, it just might keep going for a very long time.
Yeah, I think so. Great.
Awesome.
All right. So, one, I'm very happy with my portfolio. It was medtech, health tech. Are you going to take us with your free banana for our non-Patreons? Are you going to take us deeper into the medtech jungle?
Badge, my tummy aches every time I have to do what I feel like is translate not medtech but biotech into layperson speak, because there's just so much that is always jargonized, and it's quite overwhelming, and I think a difficult process. I think a lot harder than, say, Intuitive Surgical makes a robot and it makes surgery easier. But I'll do my best to explain why I think Relay Therapeutics is one of the most promising and undervalued companies you could buy on the market today. And it's especially timely because tomorrow there's a major catalyst. So Relay Therapeutics essentially has one molecule at this point that's going to live and die by. I call it Zove. The full fancy name is zovegalisib. And it is a PI3K alpha inhibitor in a competitive breast cancer indication. That's half of it. And there's a new indication coming up that has to do with vascular anomalies. So think about all the ways that our veins and capillaries get, call it malformed, or there's some genetic problem go on that level. So it turns out that this one drug works in both of these ways. So I don't think it should be a surprise to anybody that solving or curing something like breast cancer for a large number of people would be an incredible feat. And this is what Zol, this PI3K alpha inhibitor, is looking to do. And it has better data than any asset on the market currently today. A little bit of science, I won't bore you with this, is that when cancer goes wrong, it's usually because some gene is overexpressed or some protein is overactive. This whole, call it PI3K inhibitor, not inhibitor, that whole system is actually made up of several enzymes. The alpha means that out of this group of enzymes, if you target all of them, you basically end up having a lot of bad side effects. But if you could target specifically, more specifically, the exact precise mutated variant, then all of the, call it wild type severe problems go away, or they don't become as severe. Does that make sense?
Sort of. Like, so is this essentially like a better treatment for things like breast cancer?
Yeah, if you look at the slide here, maybe what I went too fast over is I talked about the actual mechanism. This acts by inhibiting the genetic mutation. The fact that it's selective is the thing that makes Relay Therapeutics molecule better than what's on the market today. Because, let me actually fast forward a little bit. If we go back in time, listeners to the show might recall that the thing that made Relay Therapeutics more interesting is that they developed a computational platform that models proteins in time. So it adds a fourth dimension. Proteins change shape. That's why it's so hard if anybody theoretically, as we know, could come up with a molecule sequence, right? And throw a bunch of stuff at the wall and hope that one of these molecule sequences solves something. But real biology, Badge, is a lot harder than that because proteins change shape. And so what might look good on paper doesn't actually work in real life. So the original thesis behind Relay is the fascinating computing platform helped them model which proteins fit exactly into a real life situation so that by getting the exact, call it shift in time, we know computationally that's going to fit better and be more selective for the problem it's solving and not, in other words, block up all the stuff that it shouldn't be blocking, which causes really severe side effects, right? So if you have this is what I mean, in this kind of like complex, you have 4 similar targets. If your drug attacks all 4, you're going to have bad diarrhea and rashes and potential life. What am I trying to say? Life inhibiting, not life inhibiting, like life endangering symptoms. So Relay's drug specifically selects better than any other for the thing it needs to solve. The thing it needs to solve is breast cancer of a particular kind, which affects, I think, 60 to 70% of women.
So it's a breast cancer drug that's better because it has less side effects, essentially.
Basically, yeah.
Okay.
And so we recently Relay got new data from a lot of the trials. And what's fascinating, if you look at this slide here, is that Zoe is in phase 3, so it's not in market yet, but it's the fact that it's tolerable. See the green light here? Means that this drug could probably be taken for a longer duration, which means that people would have a longer time that it could work. And that in turn would expand their lifespan. Basically, it's that tolerability that makes a big difference. The other thing that I want to mention, what's special about Relay that I think the market doesn't quite understand, is that I alluded to it before, when you're in biotech, a lot of people think it's just you find the magic molecule and then you project how much money it can make you. But Relay, because it has a better insight to how the molecule works in real time, it could design its trials better than most companies. So recently what it's done is kind of most people would finger wag at this. They made a bunch of late game changes to the trials and they were swapping out one molecule for another without yet having data because they know based on the computation that this is the right thing to do in terms of probabilities, that they don't need to wait on data in order to make some of these swaps. And time again, they've kind of like proven out that this is more effective. So yeah, go ahead.
Put my hand up, time out. So, but that invalidates the clinical trial, right? So if they're doing a trial just to sort of learn stuff themselves and improve, and if they can end the trial early, essentially, and change the protocol and do something different, that's cool and all, I guess. But they're not going to prove anything by doing that, and they're not going to bring anything or progress anything to market by like basically having a clown show with their clinical trials.
I think what I'm trying to get across is there's the old way of doing things, which is you exactly as you said, you need to run trials to get data. It's not like, so obviously Relay Therapeutics has to do that. They're collecting data and it takes years. But they're also designing their trials in such a way that they don't need data ahead of time to say, oh, given what we see now, we could swap this amount of the drug for less of it, as long as we can target this new thing. And so that could shave off actually months to years of the whole clinical setup, because the computational platform shows them that this is the correct move to make. And so what's interesting is that, if I may speak from the bear case, at this point, this Relay Therapeutics is a one-trick pony. It's this Zove will work or it won't. An initial prospect of the time-based platform was, hey, we'll design a bunch of drugs and we'll have lots of winners, right? So the TAM for this company is going to be absolutely enormous. But what's happened instead is almost the opposite. This platform has allowed the company to really single in on the most effective drug they could find and make all these switches along the way that basically are not easily seen by the market, because instead they've said no to this one, no to this one, no to this one, put all their resources behind the one that they feel is most, they have most confidence in. But I'm saying to you, a lot of this stuff is in trial design and it's not visible to the market and to many analysts. So it seems like in one way, this is, a one-trick pony, but the probability of success is just so much higher because they've made all these tweaks along the way that have been enabled by the superiority of the time-based protein changes, if that makes sense. So that's half the thesis. So right now, Badge, in hand, what we have is successful data about the breast cancer opportunity that's unfolding, and it's a multi-billion-dollar opportunity. But it's a crowded field. However, the reason I want to talk about this today is because it turns out that recently, well, let me backtrack. The PIK3 molecule also works in vascular anomalies. And recently, one of the big boys in pharma had a failed data readout. That basically means that Relay's molecule is the only game in town if it's going to work. And when is the readout? Tomorrow, May 19th. So I'm actually going to go on Patreon after we record and say, hey, heads up, anybody that wants to get in Relay ahead of the readout, you have 1 day, basically. Now, this is a little bit off the cuff commentary, Badge. Relay so far has been very bad at publicity and playing the IR game, but they recently did have a webinar specifically talking about the opportunity for vascular anomalies. They already have a lot of the data in hand. They can't make it public yet, obviously, but it seems counterintuitive to me that they would start, call it signing or signaling about the vascular stuff, if they knew that things were not looking that great. So this is me reading a little bit between the leaves. And so I think that this opportunity is now starting to expand. And even though the data we'll get tomorrow is actually a small study and it's still the first phase, it will potentially create a very large swing in the stock, the way biotech stocks work. It might fall a lot if the data is bad, which I think is less likely. and it might actually go up a lot if the data ends up being good. Do you have any questions right now? I tried to avoid a whole bunch of, yeah.
So let me, like you did a deep dive on Nectar Therapeutics, maybe a month ago, and I was really taken with that one. And the simplicity of the idea, but the thesis seems somewhat similar to this in that you have like a known problem which is, there are not great therapies for with side effects. So that's like breast cancer here. And now, am I understanding right? It's a bit like Nectar as well, where they're finding their way potentially, like their treatment, their therapy has applicability in another adjacent market. So they kind of broaden the potential TAM for the thing they're selling. Have I kind of got that right?
Yeah, exactly so. Exactly so. And this is actually, I'm glad you said it that way. The magic here is that they've basically, in Nectar, the Nectar folks discovered an alternate pathway, right? And in biology, when you discover an alternate pathway, it's kind of like a green field because the first pathways are already shown to work or not work with some people. So when you discover a new one, it's like, oh, maybe we have the holy grail here. Here, it's a similar kind of thing where it's this molecule that seems to be so much more effective because it's so much more precise, and that the precision of that molecule is opening up these different ways that it'll work better in different pathways. So yeah, and in fact, Relay also started putting their money behind yet a third indication that has to do with malignant myeloma, which it's too early to talk about, but there's a reason I think that basically they might have a really incredible molecule on their hands. That's the short end of the thesis. And so far, all the data proves that everything about the way this company designs their trials leads to better and better data that even the incumbents can't compete with. So it's a very exciting time. Now, let me fast forward to the fact that this company's business model is run entirely on dilution and selling additional shares. If we see good data tomorrow, there's nothing that says the company won't do an additional offering, even though at the moment they have enough cash to get them through 2029. This company will nonetheless need more money. However, if the drug is as successful as it's looking to be, from a market cap of about $2.4 billion at the moment, this is a company that could easily have over 10 billion in annual sales. And so we're talking about major blockbuster, of which there's only like 20 something, I think, in the whole world. By blockbuster, it's drugs that sell over $1 billion in revenue. So if you kind of, I guess, big picture is if you're curing both breast cancer and you're curing all kinds of vascular anomalies, and you have, because because of the magic of the molecule, it's going to work in additional pathways, then all of that stuff is accretive to the bottom line. And I'm bringing this to everyone's attention because recently, for example, a molecule acting in this particular pathway was just sold for $2 billion itself. Not the company, the molecule. And so from a $2 billion market cap, after having already done a whole lot of dilution, Relay seems to be sitting very, very pretty. And tomorrow the picture might be even prettier.
Okay, very good. I'm gonna hit you with, like, I don't really know anything about this one, so it's hard for me to like construct a bull and bear, like a bear case around it. But this is a stock that I've recalled you've been talking about for several years, right? Was this even a 7 investing rec for you, maybe? Like it goes back that far?
Yes. This was one of Max Chastko's picks.
Okay, yeah. So like at any time in that whole, multi-year journey, you're sitting on fairly substantial drawdowns unless you got in, maybe 6 months ago. Like why is it different now? I get the readout tomorrow, but why has the company just continued to decline all this time, and how far are we really away from actually having revenue?
Quick note that the bottom of the stock was about April of 25, where the shares were trading for about, call it $2.50. Just a year later, they traded up at $16. So that's a 800% change?
Yeah, but you were recommending it way before that. Like what was wrong with like the 3 or 4 years ago? Why is it different now?
Right. Yeah. So, I mean, that's the thing in biotech, everything is forward looking. And if you ignore the irrationality of prices for a second, in biotech, the market can generally stay irrational for a lot longer for reasons that truly have to do with funds deciding to wait or short it for their own benefit and so forth. But the closer you get, to the finish line and the more secure the data looks to be, the more forward the market starts behaving. And so at this point, the drugs won't be selling until about maybe 3-4 years from now. But the market could easily extrapolate. That's the thing. It'll extrapolate just the size of the market and bid up the shares to way beyond the current valuation. So you can't really, there's a danger in trying to get cute and trying to, time a bottom for that reason. Any day, let me rephrase that. Any day, a large institution could say, I want to own 20% of this. And then the price pressure will just start climbing and climbing and climbing, even though they know the drug won't be out for years. That's one piece of it. The other piece is we know that in biotech, any company, especially a small one, could be acquired any day. And you wake up to, 100-200% premium over where it was yesterday. In Relay's defense, everything they've done so far shows us the management team that wants to retain control over the entire company and is not willing to sell to a major pharmaceutical. It's only a $2 billion market cap at the moment. So that would be a bad outcome for investors at the moment, but it's always possible. So, anytime you get 100 gain, or call it overnight, even if you've invested for 5 years, that's 20%, right? That's market beating returns seemingly overnight. So to your point, the timing of this, as the phases continue to progress, the data continues to get better, the extra indications are starting to show up. This is starting to look indeed like a magical molecule. Now, I suppose any price, anything below $20, $4 billion market cap, is going to look like a bargain in 3 to 4 years. So I wanted to bring it to our attention specifically because of the catalyst showing up tomorrow.
All right, very good. And in your defense, when you bought this in your own King of the Jungle portfolio, like you're sitting on a 3x today, here's a question though, because it is actually a very small allocation in your King of the Jungle, like just a fraction less than 1%. Is there a reason why your allocation is so small?
Yeah, because I was allocating more money to the energy sector primarily, but after having done the really deep dive to prepare for this, it's getting harder and harder for me to not add additional shares because I've totally convinced myself or remembered just how singular this company is.
All right. I'm sure our patrons are going to really value that very timely update you're going to send as soon as we stop recording today.
Excellent. Yeah, I absolutely will do that.
All right. Shall I try and bring it home with the last free banana, which is Latin American in origin?
Yes. I want to know, right. I have a lover's quarrel with this company, so I want you to set me straight.
Are you so that implies you're in love with it to be quarreling. The company's
Yeah.
Mercado Libre, by the way, just so you don't.
Yeah. I've been an owner off and on and for years, and not being an owner has been to my benefit of it in the last few years. So
Totally. Yeah. Well, just in case you're listening and you have no idea who Mercado Libre are, let me start there. And Mercado Libre are Latin America's kind of combined Amazon, PayPal, and digital bank all rolled into one service, one app. It started as an online marketplace about 25 years ago, and now it's the dominant place where 84 million people in Brazil, Mexico, Argentina, and lots of other countries shop every quarter. But the clever bit is that they built their own delivery network, because Latin Americans' delivery network was terrible, not reliable, slow, inconsistent. Many places don't have an address. It's the greenhouse past the telegraph pole. So they had to build their own logistics system. They also built their own payment system, Mercado Pago, which is now used for everywhere from street vendors to corner shops. They built their own bank, which now has an over $12 billion loan book, lending to people traditional banks won't touch. And it stitched these three things together. So now they can do ultra low cost, in many cases, next day delivery of goods in these what were quite underdeveloped markets, supported by these three pillars of commerce, selling stuff like an Amazon, fintech, which is banking, but also sales and supporting the marketplace. And they've introduced things like advertising. You've got the delivery network to support it, an airline to support that. It's now a mature leader in these countries where demographics are on their side, and it's still actually a relatively under-penetrated geography from an e-commerce point of view. In these countries, still the majority of people do their shopping and do their buy stuff through bricks and mortar stores. So they still have a ton of growth ahead of them.
Okay, Badge. The best analogy I want you to walk me away from is that when I think of Mercado Libre, I think of my experience with Snowflake as an investor, not as a company, but as an investor. And what I mean by that is when Snowflake IPO'd, I basically bought into the narrative, that this is going to be the future of data information warehousing, and Warren Buffett bought it. And so if Buffett bought it, then obviously the fundamental moat must be strong and blah, 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 blah. And as a stock, it's been, it's below its IPO price, I'm pretty sure at the moment. I totally love the story with this, and everything you tell me is true. So why has the performance of the stock over the last 5 years really been market losing? And I know we've talked about this before, right? That's the last 5 years. But the question then is, well, if the last 5 years, given everything you said, hasn't produced good results, then why, is the spring just getting tight? Is the spring coiling tighter and tighter? Is that the case? Or is there something that we're missing that's not translating into a good investment? What could that be?
Well, so let me recharacterize your allegations, because this was an incredible investment up until June, July last year. And in the last year, it's taken a significant haircut. We sort of broadly agree on that. Okay.
Yes.
Right. So the question is really what's gone wrong in the last year? Like, why has the stock gone south? And it's because the company has gone into a deliberate period of significant investment. So if we look at just two headline metrics from the company, and let's focus on like the last, let's say 4 or 5 quarters. So revenue growth is skyrocketing. Like in the most recent quarter, which was just a few days ago, 49% revenue growth year over year. But at the same time as revenue growing, the gross profit margin has been going down. So like gross profit is like the profit, the amount of money you make for selling like one water bottle. If I bought it for, a certain amount of money, it cost me so much money to get it into the customer's hands. And then, and I got paid a certain amount for it, like that, the margin, the profit on what it cost me to make that thing versus what I sold it for. That's my profit margin. That's reduced. And that's gone in the most recent quarter. That's down 6.5%, which is quite material. But that's been a trend. Like gross profit margin has been creeping down over the last 4 or 5 quarters. And the reason for that is that the company is just investing in many ways in like establishing its dominance, because it sees like the land grab that it should make right now and strategically believes that that's correct. And I think I agree. So an example of how that kind of comes to life, like they've really invested in their logistics network. And I think now they've reduced, like, say on Amazon, if you want to buy, if you're not Amazon Prime and you want to buy, say, less than $20 worth of goods, whatever it is, you'd have to like pay for shipping. Mercado Libre had the same kind of thing. And they've reduced like the minimum order size to get free shipping really, really substantially in the most recent, like last 12 months. So that means it costs them more. Like it's eating into their profit margin because they're having to like subsidize free shipping for more customers who buy smaller things. And so that's one of the things that's driven their profit margin down. But that is the land grab. And you can see that's working because we're seeing revenue going up so much. And what they're like, to lean into that example more, they're building out, they're investing in improving their logistics infrastructure. So they have far more like places you can go to collect a parcel. If you do live in that blue house by the flagpole, there's going to be like a corner store or like a stall or somewhere where you can pick up your parcel, which will be, a few minutes from where you live. And so, whereas, that may have been much further away previously. There's lots of other things that the company's doing too, to invest in just making it a better customer experience. Let me tell you about 2 that I think are quite exciting. A couple of years ago, they built remember this is like Latin America, serving Latin America market. A couple of years ago, they built essentially like a big warehouse in Texas. Don't know how far it is from where you live. And then any North American manufactured goods, if they wanted to import those goods into like, North American sellers wanted to export their goods to Latin America, it was complicated and, it took time. If they want to have Mercado Libre service that sale, they ship it to this Texas warehouse, and every day Mercado Libre's own airline are picking up stuff from North America, flying it into their hubs in Latin America, and they have like a highly roboticized, like really, really efficient, fast, a bit like the Amazon factory we visited, but different kind of sets, different types of robots, but essentially the same kind of approach. Stuff comes off of these off of these planes and ends up like straight into the delivery network and can be shipped very, very quickly. They did that in Texas. They're now doing that in China. They've got at least one, might be multiple, big consolidator kind of warehouses with flights running all the time. And so now if you're a Chinese manufacturer and you want to sell it to Latin America, which they do, because already, they're doing that through like Shopee, which is another holding of mine, C Limited, and Temu. There were complexities and there were costs, and some regulatory stuff changed in some of these Latin American markets to make it more expensive. Well, Mercado Libre has now offered Chinese merchants, manufacturers, a really efficient route to get their goods into like this market. So again, like investing heavily in building these international linkages for the benefit of their customer. And I think these investments are going to pay dividends in the long term. But the stock is down because, people look at things like gross margin and say, well, holy Christ, why is the gross margin going down 6.5% year over year? That can't be good. But, here is the rationale when you dig.
I've asked this before. I don't know. This is maybe a little bit of fortune telling, but South America as a whole is also a volatile region. There's a lot of, for better and worse, right? There's really tragic economic outcomes in recent history. And that, of course, is also an opportunity if things go well. Could the uncertainty of the region also be a sort of, if I'm a bear about this, I'm like, yeah, I'm buying it. I get it. They're expanding, investing, sure. But there's only so much you could do when all of a sudden the whole country's currency is deemed without value. And Argentina is a major market that has had tremendous troubles. So if I want less risk, how could I sleep well owning this company, without telling the future?
There's another way to look at that same thing, right? Because if you don't invest in these emerging markets, then your risk is that you're too concentrated in North America for better or for worse. And, who knows what's going to happen to the North American economy with a new Fed chair and, no idea what's going to happen over the next 24 months. So, but yes, no argument. Many of these lesser developed geographies have less mature economies and weird things can happen. I think Argentina is a good example of a country that has turned around its economic woes and is much more stable than it was because it was in hyperinflation for quite a long time. But yeah, this is a risk you have. But as an investor, the job is to balance risks. And as an international investor, I absolutely prefer to have exposure to developing markets as well as mature markets.
Okay, so your confidence is high?
Well, look, you want my real read, right? This is actually a big allocation for me, and I've added to it quite recently in my retirement portfolio. The stock is probably going to continue to go down over the next, I don't know, I can't put a time on it, but I'm guessing at least 6 months, because they're still in this investment journey. And they're going to work through that. Plus, we haven't really talked about their credit portfolio. The market has jitters about them extending actually quite significant credit lines, essentially, to consumers that are in a riskier category. And so I think we just have to kind of let that strategy play out. I'm the kind of guy who doesn't try and time my way in and out of positions. I try and find companies I think will be winning in 10 years' time and then just buy them and hold my breath. And if the stock keeps going down, maybe I keep adding as long as I believe in the thesis. This is one of those to me. If you're a more sort of reactive investor and you're someone who does try and find entry points, then this may well not be for you. But I think there will be a point where their investments will turn a corner and we'll really start to see the benefit of having built this, extended their market share so significantly. They've then worked through the investments they're making, and then operating margin will turn a corner, start trending north, and then the stock is going to explode.
Okay. Yeah, this also, if I mentioned Snowflake in terms of the bad, but I also remember my long journey with Activision where I understood the thesis, but the stock just flatlined for like forever. And then just one day it decides just, like that seems to be what's kind of happening here. And if I were, not if, because I know this company well too, Badge, I'm trying to use my technical analysis stuff to help me time the entry point rather than, it's kind of, to the technical analysts, one of the things you said probably made their skin crawl, which is, well, I know or expect that the stock is going to continue going down for the next 6 months, but you buy it anyway, which is technically a contradiction because you don't buy if you know or think it's going to go down.
Let me argue with that. That's not true, right? I mean, that is true if you're a certain type of investor. But if you're not someone if you're really averse to timing the market, it's fine to buy something that you think is going down because you're not trying to time the market. And if I genuinely believe that the company will start, the stock price will explode or at least turn in my favor at some point, but at the same time, I'm not trying to time the market, then by definition, I'm buying and continuing to buy as the stock goes down.
Right. And actually, that's to your point, a little of what I said about RLAY Therapeutics, which is we know it's not coming to market for 4 years. There very well might be more dilution, but you buy now because if the window's long enough, you're going to have 25%, 30% compound annual gains, and you're just skipping the timing bit. So that goes back to the different games that we choose to play, which I talk about all the time. Do you feel complete about Mercado Libre?
Yeah. Let us know in the YouTube comments if you disagree with anything I said. But yeah, I feel like I set my case out. Hey, you mentioned Activision. We never talked about this one, but I also owned Activision for like a bunch of years. I don't know if I may have got out before it finally exploded. I seem to remember it being like a disappointing investment.
Right. And then one day. Okay, so this leaves us with my big surprise, yeah?
Yes, sir. Yeah. What are you going to shock me with? And our listeners with, yeah. I didn't know, should I be excited or should I be like nervous? Are you about to literally like take the podcast apple cart and turn it upside down?
All right, Badge. So I have a surprise for you.
I've been waiting for this. Go on then. What is it?
I did a thing, Badge. I built a machine who has one job, and that's not to lie to me. And then I'm going to bet $10 real against it in public for 6 months. Now bear with me. It's less crazy than what it sounds. And so, Badge, my thinking is, look, we have an information overload problem and we have an AI hallucination problem. I can't keep up with all the stocks. I can't keep up with all the feeds. I can't keep up with this, that, and the other thing. And I just don't know where to look sometimes. Okay, cool. Once I find out where I should look, then I try to leverage the power of AI, right? But at any point in the journey, I legitimately don't know at what point it might be off the rails, right? Because it's going to lie to me. And so I spent a real long amount of time building essentially one fundamental thing, which I consider the veracity engine. And I built in all these checks and double checks and triple checks, ways for the AI to kind of consistently try to argue against itself and find areas where it's failing. And then I'm going to seek that engine on top of a pre-built or ecosystem of stocks that I keep building, and then it keeps finding, right? So it has a pool in which to swim in. And when I marry these elements, it's then going to create every day a menu of 5 stocks for me to pick from, right? That I get to say, okay, out of these 5, I like this one the best. It's going to, based on its own intelligence, pick one. We're going to then put $5. I'm going to put $5 on each. So not a lot of money is the point, right? But just to get the signal going. And I'm going to track who does better over time from this, truth signal noise problem. And as we're doing this, I'm going to share these ideas on Patreon so that others could see what I'm discovering and what the menu items are and what the categories of stock is. And 6 months down the line, we might have a wider database of companies that we know better than if we had not done this. And we'll also know, to some limited extent, whether the AI's process is somehow better than an old stock picking pros. And if it has any merit, then we extend the contest, we refine, we change parameters, and so forth. What do you think?
I like it. It's good. Like we have no source, no end of like information overload as investors. And I see plenty of like outfits out there trying to get AI to do stock picking for them. And I think you're going about it the right way. You're setting up an experiment, a bit like a clinical trial, if we think about Relay Therapeutics discussion today, and you're going to clinical trial yourself, the monkey versus the AI, who will prevail, picking from a wider universe of stocks. So you're going to do this fun experiment in public for our Patreons. I'm here for it, Krzysztof, and I'm banking on the monkey prevailing over the robot.
Well, my robot's called Samantha Rabbit, so it's monkey versus rabbit, and Godspeed to us both. But I heard that building in public and experimenting is really engaging for audiences because this is a wild idea. It could be fantastically egregious. It could really have some merit. It could be somewhere in between, but we'll certainly learn a lot one way or another due to failure successes. And hopefully, though, it just leads to us making money, which is what this show is about.
I'm there for making money too. I love it. You know, the tool I use to help make money is our favorite partner, Fiscal.ai, and funnily enough, I imagine Samantha Rabbit AI now has a whole bunch of Fiscal AI stock data inside her, like investment decisions, because they now feed. They're like the main feed to Google Finance, but also to Claude, I believe to OpenAI and a whole bunch of other AI tools. So Fiscal.ai. And if you want to get a fantastic discount, 2 weeks free, no credit card required, you can use our affiliate link, which is fiscal.ai/wildlife.
Are you ready to become a beast of an investor badge?
Your journey starts right here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.